Shyam Srinivasan, Managing Director and CEO of Federal Bank, has joined us. Good morning, Shyam. Always good to have you with us. Aside from the immediate, mark-to-market gains and the losses due to CRR, give us the wider picture. Are you a little worried that asset quality is going to take a beating for not just one, but maybe a couple of quarters?
I would first begin by saying that I extend a big thanks to, through this I'll mention to our employees and generally bankers, what has happened over the last 3 weeks, and I saw a tweet from you also, is quite profound. What has happened over the last 2-3 weeks, the level of readjustment and service that is going on is quite sort of unimaginable. In that context, my beginning belief is that a lot has changed and probably this is only the beginning. We have to readjust to a very different new reality. So if any predictions of how it will be 1 quarter down, 2 quarter down are very difficult. So we're actually dealing with a lot of dynamic moving parts every day. But two realities are coming up. One is the fact that the digital movement is now real, and which something we were quite excited by trying to spearhead, is now going to get a real big fillip. And second is availability of liquidity will be quite material. So consequent to this, a lot of behavioral changes, client changes, how SMEs readjust, how large retail borrowers behave is going to change. So credit quality per se, Lata, I think near term there may be some blips in the SME sector, but I generally believe in the longer term even SMEs will benefit because a lot more of the transactions will be formally captured. One of the problems banks had to lend to SMEs was never visible transaction flows. So I think it may be very material in quarters ahead. 1 or 2 quarters, actually we've seen improvement in our SMA levels at this point in time. Now I don't know if it's momentary or it's going to be sort of long-standing, but short point, a lot of changes, a lot of long-term good, near-term pain, but we've probably crossed half of it.
Okay. Mr. Srinivasan, good morning. I take your point, and digitization is clearly happening, and we're seeing a lot of, cashless transactions, but it won't happen overnight. In the near term, there is some pain. The big question is, what's the on-ground situation? Because we're still seeing a lot of queues outside ATMs. There's still cash running out of ATMs. That's the big problem.
Yeah, Anuj, there are two parts. The availability of currency is something that, as all of us are aware, it's something that's work in progress. So every day there's more cash, but by the time you load, by half day, the cash is out. Almost all our ATMs have been recalibrated for the 2,000 rupee. More than 50% have been recalibrated for the 500 rupee notes. So by end of this week, latest by early December, ATMs will be ready to accept or dispense all currency denominations, the availability of cash. But every day we're seeing incremental flow. The 500 rupee new 500 rupees is what I think needs to take a larger number, should happen over the next 2-3 weeks. But your first point about gradual migration to digital, I think this is a step jump that has happened. I'll give you an example. In our case, two learnings I've had. One is we were seeing almost every quarter mobile-based banking transactions were doubling, albeit a small base. This quarter, in the period, say 8th November or 10th November, when really the thing hit us, everybody, 10th to weekend of 26th, we saw that improve quite substantially. But interestingly, it was low ticket. So the volumes didn't go up, as in quantum didn't go up, but the average ticket size dramatically improved, whether it's mobile, whether it's POS or even UPI. So the catch-up is happening, and as you know, 70% of my footprint is rural semi-urban. It's not like high street Mumbai. And we're seeing movement there also, compounded by the fact that the banks are going really helpful. They're trying to give the point of sale in place, promote UPI, promote our Lotza, which is our UPI app, or whether it's mobile banking. So yes, it is going to take time, but I see that this is a big fillip that has come, maybe a much needed one.
Okay, I have not felt the 500 rupee note. Someone in the office showed it to me, but I couldn't get it. I couldn't get it, Shyam, and I have that complaint, and I'm really worried about December 1st and the salary payments. Okay, first tell me that. Will you go through the salary? No, my husband stood twice in the line and he did not get a 500 rupee note. So it is not laughing matter for me. I'm genuinely worried about December 1st and the salary payments at my end and at every end. My maid is not prepared for cards. She's definitely not. She's an extremely efficient worker, but she's not literate. So I am genuinely worried about how the December 1st salary payments are going through. And therefore, let me come back to both that. How much do you think your margins or your profit will be crunched in this quarter? And specifically on the other income front, now that you have to pay a CRR, for the moment at least, is your other income also a hit?
See, on CRR, I'm quite convinced the regulators will step in with some kind of meaningful compensation. I don't believe it'll be the banks bearing all of it, but that said, it has to be sort of watched for. In terms of overall fee income coming down, thankfully, in a very cruel way, the percentage of fee income for us is not a material part of our incremental revenue growth. So to that extent, I'm not too alarmed. Yes, there will be some dent, but there are other opportunities on the treasury side which may square off some of this impact. On the margin side, I would say it's early to call because the big credit disbursements, if it were to happen between now and December end, some of the portfolios that we are looking to acquire, and there are some few opportunities which we have lined up, which transactions may go through. The impact may not be very significant. Yes, there will be because we are carrying deposits which have not been, our CD ratios have dropped. So there will be some impact, but that's, I think, pan industry. So the differentiation will come. Who does it better? So yes, there will be some impact in the order of maybe 5, 7, 8 basis points, but that's something that we are trying to find other avenues, because if the credit slippages are lower, then the interest reversal on account of slippages may be something that we can help to offset the lower margin. So it's many dynamic moving parts. Yes, jury is out, but I think the effort is to try to make sure that we come out quite ahead.
Oh yes, Mr. Srinivasan, thanks a lot for your time today, and we really hope that the